Hey traders, this is Ron Hayden at Market Chamber. Happy Monday. Hope you're having a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the SPY, which I have a long-term bullish position in. The market sold off today, in my opinion, on just the idea that the Supreme Court approved basically the idea that states can tax internet commerce. We can have a video on the ramifications of that and how unbelievably awful it is and how it's going to hurt small business. But we'll save that for another another time. It's just bad. It's real bad. So the market initially is reacting poorly to it. I'm still longer term bullish on the market, looking out 6, 12, 18 months from now, something like that. In the longer term, if this actually goes through and the states try doing this, it's just not going to be a good thing. But let's focus on the short term. Here is the S&P, like I said, down 1.36%. Wasn't all that bad, all things considered. We were below the 50-day SMA in orange, which is right here. Managed to finish above it. But you can see the horizontal trading range. Then I had this uptrending channel. We violated that. Now, we didn't break the 50-day yet, but we did break it on a technical basis. When I say break it, broke that lower trend line. Right now, the target naturally would be the 200-day moving average. And then coming down here around the 257 area, which is that multiple levels of support back from February, March, early April, late April, early May. And so it looks like we're going back into a trading range. We just need to keep an eye on it. How about the diamonds? Because the DIA was the worst performing of the indexes. The Dow came down and kissed the 200-day moving average in purple. Now, I've been telling you guys that's just an area to watch for, right? Well, now we're here. Now, here's the next thing. We're on it, but we still haven't broken those lows around 235, 236. So if we break the 200-day, which easily could have happened today or tomorrow, watch 235, which is going to be about 500 points lower on the Dow. If that falls, then we could be in for a true correction right now. If we take a look at the Qs, they fell over 2% today, 2.25 to be exact. Volume definitely picked up. If I just zoom in from January to now, the 50-day in orange is right there around 168-ish. And then you would come down maybe to the rising trend line, which also corresponds with the 200-day moving average. So down here is the big target. Ballpark that at 160 on the Dow if we lose the 50-day around 168 right now. Let's take a look at the IWM, which is the Russell 2000. The Russell and the mid caps have been doing quite well. They've been leading the charge pretty much since May, most of the time. The IWM lost 1.63%, so it was down less than the Qs. Qs got hit the hardest, but we're below the 20-day. Now the target's the 50-day, below the 50-day. Naturally, we would go to the 200-day moving average. We're just going to go down to those MAs for support. Here are your mid caps down 1.43%. Yes, volume picked up. It wasn't super big though. We're still above the 50-day. 50-day falls, we go 200-day. And the MDY, look at the times where we've closed below it. We haven't. So if I zoom out here, we haven't closed below the 200 days since last summer in August. And geez, that was just for literally 2 days. And then we got right back above it. And since then, February, late March, early April, got close to it early May. We've always stayed away from it. So if the selling continues, you have your targets 50-day, 200-day. If I take a look at the VIX, it jumped 25% today. That sounds amazing. It's still only at 17, and it was almost at 20. We came back off those highs. When it closed, it basically closed right in line with that little May spike, which was 1702. We're at 1733. Not exactly a massive breakout. If it would have finished the highs, I'd say, okay, we're starting to break out here. Maybe there's going to be continued push. I don't like using technical analysis on the VIX like I would a stock. It's not comparing apples to apples. It's almost apples and oranges to a degree. But what we want to look for is a breakout, and I want to see the second continuation day. That tells me something might be brewing just for my own personal probability basis. We only really got one here. If we get another big one tomorrow, maybe we get a couple days follow through. But it's been so long since we had a correction. I mean, geez, that's 1 year. We only had one spike in February, and that was over in the course of a week. If we go back 2 years, I mean, just little blips. So again, this hasn't happened very often, but right now we are getting a little bit of a push higher. So it's noticeable, but it's not a done deal that equities are going to sell off yet. How about Apple? 50-day moving average. It's been cracked, and it's been cracked by enough. The 50-day 182.90, we're at 182.17, 72 cents, 73 cents. That's enough. Target is now a gap fill, which is right near the 200-day at 170. So about 12 bucks lower technically on Apple. And when I throw out these technical targets, doesn't mean we're going to do those things. That's just where the next support level lies. And you might see some buying or some support come in. How about Amazon? It closed below its 20-day EMA in red, and volume did pick up a little bit today. Again, not massive, but it definitely increased. Watch the 50-day, and then I would come down to this swing low in April. Amazon hasn't been below the red line since right before earnings in April. It's been on a nice run during a, guess what, seasonally bullish period. So it was no shock that Amazon tacked on 150 points in about a month and a half. That's just the time when it typically roars. How about Netflix? This has been a darling since the beginning of the year. This was one of those stocks we were literally pounding the table on to watch for, and it's just been go, 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 go. And then recently, we started pulling back just Thursday, Friday, and now today. Volume is picking up. We're not even below the red line yet. If the red line fails to hold a support, we go orange. It's that straightforward. How about Google? Lost 30 bucks today. $30.01 below the 20-day, target 50. Then the 200 is right below it. But if you look at what happened last time, it played hot potato with the 200-day. We're above, below, above, below, above, below, above. And the same thing happened here in late April, early May. We can't expect, based on history, that this is going to be a perfect thing. But boy, oh boy, they sure defended $1,000 on Google. So if these moving averages start getting broken, $1,000 on the nose is the target. NVDA, down for almost 5%, almost 12 bucks. Let me just go from January to now. We gapped below the 50-day in orange and then finished near the lows. This tells me this stock still wants to go down a little further. Target is the 200-day. I warn traders that beware of NVIDIA because it actually turns seasonally bearish. It goes from a bullish stock to a bearish stock in June. Over the next 7 weeks, it goes down roughly ballpark 7 or so percent, more than half the time. This is something you need to be aware of if you're a trader in NVIDIA. If you knew this was coming, think about it. Could have considered covered calls, just putting in weekly options, monthly options, putting some money in the pocket, try and reduce those shares cost basis, and now it's not looking as bad as what it was. It's like, wait, I was almost at 270, now I'm at 239. But this is the time when NVIDIA typically sells off. Adobe, another one that's been doing so well since January. The 50-day has been great support February, April, May, and now. If I zoom in real close, the 50-day closed at 239.23. We're at 68, so we're barely just above it. If we close below more than just a couple pennies, maybe 50 cents or more or a dollar, then below the orange line, we would go back to the next swing low, which is right in here. If that takes a little while, the 200-day in purple is going to start working its way up. Now, some stocks that have done well today, the staples. Once we got above the 50-day moving average back on June 8th, that close was 50.44. It's only up about $1.50, but it's inching its way higher despite the market having trouble. Then you transition to stocks like Clorox, CLX. While the market was down 1-3%, this was up 2.72%, and it closed above these previous highs. Target gap fill at 140, still $7, 5% upside technically. How about Hershey? HSY, if I can type here. Hershey popped 1.65%, and it closed over the previous high by 20 cents. So once again, target 200-day moving average. And remember, when we came back down here and it faked us out here and even here, I said, now what I could consider is maybe $90 as the line in the sand. Right now, that's still holding up. I would still use 90 as the line in the sand. If we get a little higher here, maybe like another $2, then I'd go back to the 20-day EMA as a potential end-of-day trailing stop. How about KHC? We've talked about this one. Kraft Heinz. It finished in the green. It was actually up over $1 at one point today, even when the S&P was getting whacked. And General Mills, another one, up 1.75%. Now, if I get rid of that line right there, The target is a gap fill, which is just under 50. So, $3 higher, maybe 6% or so. And we also have P&G, which is Procter & Gamble, tacked on almost 0.5%. Gap's been filled already. Target really is the 200-day. So while the broad market was getting whacked, the staple stocks, which have been out of favor, actually performed pretty well. So there you have it. Just to recap, the bulls are starting to run into some trouble here. We're starting to have a little bit of small breakdowns. Let's keep an eye on the 200-day moving average on the SPY. And if we go to the Qs, I just want to see how the 50-day reacts, okay? So wish you guys all the best. I'll be back with you tomorrow with another video.